Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, June 20th, 5:17 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend. You can see over here on the trend gauge. We've been flashing since June 9th, all four signals on bullish/uptrend. On 518, we went to uptrend for market leadership. That's held up very well. Same with the short-term 21-day signal for the five major indexes. Of course, we've got the stop sign here because of the runaway freight train strength of the NASDAQ 100. Pulled back a little bit more today, but continues to be extended by historical measures from its 21-day and also its medium-day 50-day moving average, all five indexes, of course, trending above the medium 50-day and above the long-term 200-day moving average. So what happened today? Day two of a pullback, just like Friday, red across all of the indexes or sectors or composites that we've created, red across the board, but it's a normal pullback after some exceptional strength. Here are the numbers on the day. RG8, this is our 8 growth ETF. Composite down 0.43%. S&P 500 gap down 0.45, closed just about right there, down 0.47. NASDAQ 100 gap down 0.4, showed some relative strength. Intraday down 0.14, Dow down 0.7. Russell 2000 small caps down 0.5. Global diversified 60/40 stock and bond down 0.46, led by bonds as bonds were up. Bond prices up across the board, meaning yields dropped slightly. In-house GROTECTION down 0.38% on the day. Standouts to the upside were NVIDIA and Tesla, held back by Celsius and Uber. We'll get to the tail of the tape and charts of interest. I've got 10 or 11 tickers, non-tech tickers, that are either in the 2121 or that we are keeping a close eye on as a way to diversify the portfolio. Don't want to have an all-tech portfolio when there is indeed strength across other sectors. That was William O'Neill's hallmarks of his system, was you get your diversification across leading sectors. You don't necessarily need emerging markets or international stocks or real estate to be diversified, unlike what some pie chart advisors with no stop, no sell discipline will tell you. So let's dive right into it. We will start here with the S&P 500. You can see I've redone the day count a little bit. You'll see this when we get to the tail of the tape. But the obvious breakout was 6-2. Before this, we were just chopping around, had a couple of attempts at a breakout that failed. But the very clear breakout was on 6-2. So that's what we're counting now as day one for the rally. So you can see the strength up and then 2-day pullback, quite normal in the context of things, as I say repeatedly. As long as you're above the ADMA, you can't complain in any way, shape, or form. That is a strong short-term uptrend, and that's where we are. If you look at the 60-minute chart, you can see here why I changed the day count. I was originally counting back here where we pulled back, but we fell back into the base, tried to run again, pulled back into the base, tried to run again. But this was the clear breakout, as you can see if I draw this horizontal line here, 6-2. So we're also down near oversold on the S&P 500. We started a little hookup late in the afternoon, approaching oversold. Didn't quite finish it up with strength, but this is good action. Pullback, no significant damage being done. I can't find anything honestly to complain about. Same situation with the NASDAQ 100, bounced at the 8 EMA today with this bounce at the 8 EMA. And also, if you look at a 5-minute chart here, this no, we need to go a little bit longer. Let's go to the 15-minute chart here. You can also see the pivot back here, 2 o'clock, last Wednesday. This is the Fed pivot. It was around 364-ish on the NASDAQ 100. Today's low, right under 364 on the S&P 500. It was at 43.74 right here, which of course we sold off with the Fed. But then we had Thursday a lot of strength, early Friday strength, a little bit of a sell-off, but we stayed under for less than 30 minutes, under 43.74, reclaimed it. So that's a pretty critical level as far as I'm concerned. It's also right around the 43.75 level, which was the prior high before this move higher pre-Fed last Wednesday, and then we had to shake out and then made higher highs. So 43.67 to 43.75, pretty good area. We want to hold that. That's the shortest term level that we want to hold on any pullback, and that equates with around 364 on the NASDAQ 100. So let's get back to the daily chart here, to the NASDAQ 100. And again, we'll show how extended are we from the 21 and the 50-day. Let's go back to our maximum extension, which we closed on 6/15 Thursday. We closed 5.8% above the 21 and 11.6% above the 50. We're now down to 3.9% above the 21 and 9.9 above the 50. Still pretty extended from historical levels on the NASDAQ 100. Not quite as bad on the S&P 500 now. Over 5% is, a kind of a waving red flag, but we're down to 4.8% versus the 50-day moving average, whereas we were at 6% on 6/15. So that was when we put the red stop sign up on the tail of the tape. Let's go to the Dow Jones Industrial Average. Still battling with that 34,000 level, sitting right on the ADMA, undercut and reclaimed it today. 34,000 has been a big level for a while, but stacked above the moving averages the way you want to see it. Mid caps and small caps pausing. They closed basically right below their ADMA. Would have preferred mid caps to hold that, and also to hold this little breakout above that we made last week, but some relative weakness here. No damage to the chart, but some minor relative weakness. We still have our TNA long on, represented by IWM, a 0.1% close below the ADMA. We don't want to see today's lows broken very clearly. We did undercut the lows after this breakout, but reclaim them. This was the low from 6/12. Let's take a look at a 15-minute chart here on the 12th. Here was that shakeout low in the morning. We tested it last week after the Fed, and we undercut it today, but reclaimed it. Well, undercut and reclaim is great. That makes it a false breakdown, but it also means that it's a line in the sand that you don't want to go below. So this 184 area, pretty important on IWM here. We want to see some continued strength here on IWM. You can see on the 60-minute chart, we've also got the stochastic hookup from oversold territory. It hasn't gotten out of oversold. Ideally, you want to get above this 20 level, and you want to see it trend the way it did here, the way it did here, the way it did here, the way it does on so many occasions when you come off of oversold. And we'd like this indicator as a way of seeing the flip happen from very short-term bearish to short-term bullish. So those are the major indexes. Let's go to the VIX. Index is down today, but the VIX down also. Poked its head above the declining ADMA, back below it. Very historically low levels on the VIX, also very oversold. Let's go to UUP. The dollar was up today, gapped up, closed near the lows, ran into the declining 8 and 21 EMAs, coming off of oversold. Additional strength in the dollar will be a bit of a headwind for stocks and also for precious metals. The strong dollar, precious metals were down worse than they should have been today. So this makes this a very clear pullback and a bear flag and a gap down 4%. That's not a good move for silver. So stymied by the 50-day moving average, was playing ping pong along the 21. We've been talking for a while about how GDX and GLD were unable to get above the 21 and now putting some distance between itself and the 21. Although GDX, you can see it's got very clear support here at the 30 level. Wouldn't surprise me to undercut 30 and bounce at the 200-day moving average, but you got to get back above this 21-day moving average for the bulls to say that they're even uh, having a fighting chance. Same situation with GLD. It's been battling the declining 21 and now the gap below today. This gapped below this 180 support level, closed right below that 180 support level. Anytime you lose a support level, you want to regain it quickly. So gold bulls are going to want to get back above this 180 level pretty quickly. Bitcoin now, on the other hand, with a strong day today, don't really know why, but it had been seeing, despite this one move above on 530, it had been in a downtrend below the 21-day moving average. That ended emphatically today. But now the next battle is against this 16 level, which we had been saying for a while was a support resistance level. So it's going to battle that and also the 50-day moving average. So Bitcoin bulls, you want to see a break above that 16 level on BITO, which is the Bitcoin futures. Let's flip to bonds now. I said that the broad bonds were up today. Here's BND up 0.14%, still trading in a tight range. TLT, the long term, uh, gapped up into this declining 250-day moving average. You can see we've got an alert set above that. That's the bottom of the range that it's the top of the current range, the bottom of the prior range that it broke below on back in the middle of May. So retesting that level, we'll be keeping an eye on that. And TNX, this is the 10-year yield. The 10-year yield down 1%, but still riding the 21-day moving average, holding it. And TYX, the 30-year yield, down 1%, breaking below the 21, but on the 50-day moving average, you can see that line that I've drawn here at that 38 level. So the yield at the bottom of the current range, which corresponds with the top of the prior range, just a support and resistance concept. We want to see how things react here. I mean, normally what should happen when you're at the bottom of a range is support should hold, it should bounce here, and yields should go higher. If not, then it's a change in trend. It's a failure, a breakout failure to this higher level from this prior level. It means that that 40 resistance on the high, which is about 4% on the 30-year, it means that that resistance stayed intact, and then we'll see how low we go from there. You could also draw a diagonal uh, uptrend line along the 200-day moving average here, which it's obeyed and has bounced on repeatedly going back to the beginning of April. So let's check in on the equal weight indexes because the big caps supported the indexes today. Equal weight, that's not good. Down 1.34%. That's a break of this uptrend line. And also a kind of a change in character because we had been seeing broader participation outside of the big FANG stocks, but the FANG stocks did outperform today. 5 of the 7 higher on a red day. The only 2 that were down, well, Apple was barely positive, but 2 that were down, Microsoft down 1.2%, Google down 0.35%, Tesla and Nvidia continue to rock. But that did break, so minor change in character there, and also note that it's over bought. QQEW, equal weight, NASDAQ 100, also a gap down, but that bounced right at the ADMA. Nothing you can complain about there. Let's go to the tail of the tape now. You can pause this. VIX down, fear and greed, 79. Big news today. I was watching Steve Leisman. Well, I watched a replay, not live, because I try not to turn on CNBC unless they're having something big going on. But I watched a replay of Steve Leisman reading the housing starts, and he thought that it was a misprint. And they went to Diana Olick, and she said, no, this is confirmation. This is a massive beat on housing starts. The expectation was for just a fractional lower. They were up by 22%. Massive beat. ITB and the home builders responded today. ITB up 1%. And across the board, home builders continue to show strength. And that's that's not where if people are, it's like they're getting used to these higher interest rates with these May housing starts. There's a very low supply of existing home sales. So then if you can't buy an existing house, you got to go to one of the builders. And it's a big tailwind for them. People that have low interest rate mortgages do not want to give them up. Why would you trade from a 2% or 3% or 4% even mortgage for a new one that's 7%? No, people are staying in their homes, but that's working very nicely in favor of the home builders. Big move up in housing starts. And will you see a recession if unemployment stays strong enough for people to have confidence to be buying houses? That's kind of a rhetorical question. So, as I said, redoing the day count, 12 days up. So, 4 up since the most recent breakout and 2 down. Normal pullback, 16 days above the ADMA, 17 above the 21. Um, Nasdaq and S&P staying extended, especially Nasdaq 100, continue to trade in range. Our expectations remain positive as long as we're above the 21. You know that's how we roll here. So at the open, gap down 0.45%, sold off down to 43.67, then rallied up to 4,400, and then tight all afternoon, like a 10, 11 point range, very tight for just hours this afternoon. Uh, Mostly down sectors on the day. The only sector of the big 11 that was up was XLY, and that's because Amazon and Tesla dominate that. And Tesla had a huge day. Only change in-house that we did on the portfolios was closing our QID hedge. Several reasons. I noted the bounce at the ADMA, the 60-minute stochastic getting over sold and hooking up, and then also corresponding to that 364 level on the Fed pivot from last Wednesday. So several reasons to get off of the short, take our small loss as the big NASDAQ stocks remain strong. We can very easily put it on if we break back below today's lows. As I said, I consider today's lows to be pretty important, both on the Nasdaq and the S&P 500. So that bumped our adjusted beta up to 1.94. Here are some of the stocks I'm going to go through, these 10, 11 non-tech plays, charts that I want to look at. And bottom line for the day, broad pullback day 2, normal consolidation action, no significant damage being done either to leaders. I talked about possibly taking DraftKings off over the weekend as it closed just a fraction below the 21, but it undercut and reclaimed it today. And that's one of the 11 non-tech stocks. You could argue that's a tech stock. You use your phone, it's gambling, it's certainly technology taking advantage of a gambling platform, but it's in the leisure gaming equipment sector. You can see the undercut of the 21 and reclaim. This does really not trade nice. Any strength is immediately sold. Sellers immediately come in. So I'm really looking for a reason to get this out of the 21 over 21. And there are some other things that are looking to break into the 21 over 21. I'm getting calls from their agents saying, hey, put me in there. So let's go to 5 more that are in the 21 non-tech stocks showing strength, looking for diversification. I was bad-mouthing ELF last week. Don't bad-mouth ELF. All it did was, it did have a big day of sell-off volume, down 3% on the 13th, bounced at the 21. Next day bounced at the 21, had an inside day. A little bit of strength coming in, reclaimed the ADMA. Volume exaggerated on Friday, but its volume is typically higher on options expiration. ELF got an upgrade and a price target raise this morning above the ADMA, gapped up, held most of it, up 3%. It just will not quit. Relative strength only lagging slightly versus price. was definitely one of the 3 I wanted to get into last week. I didn't when I saw that weakness, but may have to revisit that. So that's the second non-tech stock. Third one is Intuitive Surgical, which is continuing to hold up nicely. Really just a market stock, but a nice gap up, reasonable pullback on lighter volume. Note the nice volume of the 3 days of accumulation last week after that gap up. So Intuitive Surgical, LYV. LYV, I said. Live Nation, 2-day pullback showing some very nice strength. This is people spending money on experiences and as well as homes. And again, doesn't fit into the it's a recession timeframe. Look at the accumulation, 4 or 5 days of accumulation there last week on LYV. Next stock up in the 21-21 is Race. Minor weakness on a relative basis. Price action looks very fine. Again, there's no recession for the uber wealthy. Toll. This is a representative of quite a few. We could have Meritage in here. We could have DHI in here. We could have ITB in here. But the builders continue to act very well. And those are the 5 or 6. Let's see, 1, 2, 3, 4, 5. Those are the 6 from the 21 over 21 that are non-tech. Let's go with these 5 more, and then we'll wrap up the show. Caterpillar, nice pullback and consolidation after this uh, big move, reclaiming all the moving averages on 6-2. This also corresponded with that beginning of that rally I was talking about with the breakout. It took off like a rocket. This had, there was talks of China stimulus when this happened. Sometimes that just will give a stock a pop for a day or two, but this jumped from 205 all the way up to 250. Now pulling back. We got the 60-minute stochastic buy signal today. Didn't take it, because we're waiting for this pullback to play out a little bit more on the S&P and the NASDAQ 100. But Caterpillar, a nice, gentle, low volume pullback and consolidation of that strong move up. Next stock is Shack. I had talked about replacing CMG with this in the 21 over 21. Shack telling me, yeah, you should have done it. One of the reasons I did it is because it had already gained near 20% from the pivot, and putting in like a mini cup and handle here after the breakout. This is just acting good. There's also an activist investor after the some board seats and the upper management, just saying that there's so much untapped potential for this franchise because of poor management, and that may have something to do with the price strength. Also note they're turning profitable this year and next after losses the prior 3 years. If a restaurant, um, well, I don't know. I don't want to get off on a tangent. We'll just move on here. The next one is Play. Again, people experiencing wanting to spend money on experiences after COVID. Play gapped up on earnings, then talked about how their numbers went into more detail on how good their numbers were going to be. Pulled back after that to the ADMA, bounced at the ADMA, up 4.8% today. Nice move in Play, another non-tech. And the final two here, BLDR, definitely the theme with builders. Uh, Bounced nicely at the 21 in this 120 support level last 2 weeks. And then finally, CCJ. This is a uranium miner. Big move out of this base here, pulled back, negative reversal last week, but holding the ADMA. And I reiterate what I said about the ADMA. As long as you're above that, you can't complain about what's going on. So those are 11 non-tech stocks that we're keeping a close eye on to get some diversification. We don't want to buy all tech in our portfolios. And that's going to wrap it. So as always, like to hear from you. My email is don@revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932. You can also email my partner, Dan Stewart, dan@revereasset.com. If you're interested in becoming a client, we've had some nice additions to our AUM and some quite a few clients coming in over the last quarter. We're glad to see it. Uh, participating in uptrends, defensive during downtrends, growth and protection. GROTECTION, that's our flagship portfolio. Give us a shout if you're interested in learning more about it, because remember, it's not how much you make in the market, it's how much of that you can keep. And with that, I'll wrap up Tuesday, June 20th. This is Don Vandenbord with Revere Asset. Just the facts from Revere, telling it like it is. Thanks for listening. Have a great day.